Virgin Orbit faced bankruptcy back in April, so what can we learn from this for Virgin Galactic SPCE space stock? Welcome back to Intrendias. You may review my most recent coverage on space, where we reviewed the reason behind Galactic's 3 years of financial burden ahead. Space is considered a sell here at Intrendias, as the incoming Q2 earnings report on August 1st after hours will most likely reflect even greater operation expenses, while Space only received so much in revenue from their first commercial space flight. Virgin Orbit was a spin-off company where launching satellites was their main focus, while splitting Galactic for consumer space tourism. The Launcher 1 project originally started under Virgin Galactic, but was then carried over to Virgin Orbit. The Launcher 1's purpose was to launch small satellites into orbit with the help of the modified Boeing 747-400, where the Launcher 1 would rest underneath the wing of the plane and then be detached and launched into Earth orbit. A different approach compared to traditional rocket takeoff, but not a novel idea. This is called Air Launch to Orbit, or ALTO, which was first successfully done in 1990. Where did Orbit go wrong here? Orbit's issue was lack of funding and large cash burn, with cash dropping 74% year over year and total current liabilities increasing to 153% during the same time. Moreover, when considering current liabilities, this adds up to a $338 million hole with no additional cash in sight. Orbit failed to gather additional funding, which resulted in bankruptcy filing, laying off staff, and ceasing operations. Now let's compare Virgin Galactic with Orbit. Galactic does hold more cash than Orbit at end of year 2022, but Galactic faces greater operating activity costs. The operating cost to cash ratio is not as bad, coming in at 126% compared to Orbit's 428%. But in a cash burning business, this percentage can easily increase quickly, as we see with the 2023 end of year projection on the right at 200% operation to cash. At the very bottom, we can see operating plus current liabilities over cash move from 187% to 267%, edging closer to that 665 Orbit number. This is why Galactic continues to push for further funding, as we have seen them seeking an additional $400 million back in end of month June. However, end of year operating activities in 2022 was $380 million, so this $400 million will only last Virgin Galactic another year. The new Delta class ships are not expected to hit the ground running for another 3 years. Although Galactic will be performing monthly flights now, this results in $9 million in revenue for the remainder of 2022, assuming each seat costs $450K, which is nothing compared to the $730 million in operation and current liabilities. Even on a day of good news, space stock dropped when the first commercial flight occurred, which may result from profit taking and the market pricing in future flights. For example, Apple stock does not rise solely because a new iPhone is announced. The next space flight will be around August 10th. Retail investor hype may drive the stock up, but I would not bank on this. Let's go into the technical analysis to review space stock. Space has consolidated all of July as the price fluctuated between $368 and $401. The upcoming earnings report can help break this consolidation period for better or worse. Profit margin has continued downward since Q1 2022 as we experience greater operation expenses. As we've seen the MACD cross, perhaps we can see a bullish confirmation if the SMA 90 crosses over the 20 basis line of the Bollinger Band. Another bullish pinpoint is to fill this volume gap occurring on June 23rd when Space seeks more funding. Overall, here at Intrendias, Space is considered a sell because of potential future stock dilution, lack of substantial revenue growth until Delta class ships hit the scene in 3 years, Space must survive for another 3 years, and higher operation and R&D expenses continue. Thank you for watching the channel. If you enjoy this type of content, please make sure to subscribe and check out the free Intrendias website in the description and comment down below. See you in the next one.